India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live, as always, from the CNBC TV18 Motilal Oswal studios. It's a Thursday morning. U.S. markets have made a new high. The market here for the last 1 week has been consolidating. Will we start to look up a little bit as well? Will that end of the year cheer, which, by the way, has already come? I mean, the last fortnight has been good. It's just the last 4-5 days, which has been a little sort of sideways. Will that come back is the question. I'm Prashant. With me, my colleague, Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, Nigel. Morning, Prashant. And yeah, I mean, for all the people who want to write off US big tech, saying the market is broadening as you look beyond technology, it's still very much the big trade. Like, look at the NASDAQ, 20,000 yesterday on that one.
Well, indeed, that was the big headline, right,
Yeah.
in terms of the NASDAQ move, and plenty of the tech-related names do it. So let's see whether or not it has some rub-off today. But I think maybe today it could be a good trading session, just maybe. We have that expiry-related weekly expiry, but otherwise...
But you remember what happened, guys, last Thursday? You remember? Every 1 hour, it was this 300-point drop and then the 200-point rise, and it was on that giddy session. So just hoping that it'll be a little less...
A little calmer?
Yeah, a little calmer than that.
All right. Well, let's just bring it down to what you need to know when we start a new trading session. And, of course, we'll start with last night, right? U.S. markets, a new record high. The NASDAQ composite above 20,000. It set a new sort of all-time high. And this is on the back of Fed cutting interest rates. So you had U.S. core CPI numbers which came yesterday overnight. And they've all but cemented 25 basis point rate cut expectations in the month of December. I'm talking about market pricing. That's now firm at about 25 basis points. You can go into the nitty-gritty in terms of how the number actually was a little higher than what the Bloomberg consensus survey was. But then, you know, there are others saying, well, the OER component, the owner's equivalent rent, that's essentially the most sticky part, that's actually softened, and that's the reason why markets read it quite well. So the stocks first, S&P about 0.8% higher, NASDAQ about 1.76. I mean, that's a big one. And there were lots of these single stocks which did very well. I mean, actually, Tesla made a new all-time high, Google was higher, and a bunch of other, NVIDIA, I think, was slightly higher as well. Wix, about 4% lower. We're at about 13.58. This is the CBOE Wix. Post-hours, trading hours, you had Adobe, which sort of fell. The stock fell sharply, and it basically gave a lackluster 2025 outlook. We'll see. I mean, actually, you know, if you look at outlooks, and recently over the last 2-3 weeks, you look at, say, for example, remember what Oracle said. And now Adobe as well. And this is all sort of feeding into expectations for 2025. The rates market, so as soon as the CPI numbers came, yields fell. They first fell to about 4.2%. But by close, they rallied all the way to about 4.27, which, by the way, is also an important technical resistance. And it kind of, at least for the session last night, topped out at about 4.27. Dollar index, about 0.25% higher. Remember, the last week was soft for the dollar, and we came off quite a bit, and we're back at about 106.62. So it's been a steady, slow climb higher for the dollar index once again. Oil prices about 2%. We're 73.59, 73.6. I mean, there's that headline that before Trump takes over, the Biden and his administration is going to sanction Russia further in terms of oil, etc. We'll see if that has any sustained impact. Later today, we've got the ECB meeting. A 25 basis point cut is largely and fully in the price. And we'll hear commentary, etc. as well. As I said, the frontline indices have been consolidating for a while. So very quickly putting out the levels. The Nifty has been in this narrow range between 24,500 and 24,850. Those, by the way, are your supports and resistance. 24,500 on the downside and 24,850 on the upside. Just sort of go back and look at the last 4-5 days, and that's essentially been the band. You're almost exactly between, both those levels. The Nifty Bank, supports come in at two levels, the 40 hourly exponential average, which is 53,301, and then 53,160. These are very, very near-term supports that we're talking about, but it's been a very narrowly sort of trading, narrowly ranged market, and that's the reason why we're not going any further in terms of putting out slightly larger levels. Resistance for the Bank Nifty comes in at the swing high. I mean, the number we put out for the last couple of days, 53,888. As I said, can maybe, in the maybe second half of the session or maybe towards the end of the week, and we've got one more day to go, some cheers start to come back at the index level as well. We'll see. GIFT Nifty will indicate how the open, at least this morning, is. It's something similar to what we had yesterday. I think yesterday at the same time we had about 8 points. You got 2 points on the GIFT Nifty. Surabhi.
Well, actually, Asia is doing pretty well, barring Australia. Most of the other markets are a nice shade of green right now, including the Chinese market, including the Japanese market. So it's more green than red. Even South Korea is trading on the positive side today. So Asia is basically building on that rally that we saw on Wall Street with the Nasdaq hitting that psychological level of 20,000. So looking good. By the way, Reuters did a survey with the Japanese company saying what will Trump's presidency mean for Japanese business. Guess what? 73% say that it's going to be bad for Japan. So just thought I'll put that on the radar as well. In terms of oil, while, of course, we're awaiting how the U.S. looks at Russia and what happens in terms of sanctions, the EU has already moved. They have, slapped additional sanctions on Russian oil coming into the market. Because of that, we saw this 2% move on Brent overnight. And now we're looking at oil closer to 73, 74 than the 72 handle. It's the same trading range, but it's at the upper end of the recent trading range. By the way, OPEC cut its output or its outlook for world oil consumption for 24 as well as 25. And it's, again, a very, very big cut for 24. Now, they're saying that the forecast is 1.6 million barrels a day, which is about 210,000, lower than previous projections. And from July, they've been slashing the output downwards. Now it's 27% lower than what they thought in July. So that's just OPEC's assessment of oil demand. Back to, of course, trade here, very range-bound, very quiet session. The action has been on individual stocks. That's been the trend last couple of days. So let's see if that continues. Like I said, I'm only watching out for this Nifty expiry because it's that weekly product that's expiring today. And last Thursday was, really a roller coaster. So let's see what we get today. On the flow side, FIIs have turned sellers in terms of yesterday's action. Down about 1,000 crores from the FIIs, but domestic institutions have been making up for it, 2,000 crores of buying from DIIs. A couple of interesting stocks in focus. Watch out for Nuvama, because the sources have been telling us that Edelweiss could be selling the rest of its stake in the entity. This is just about 7%, and it's a complete clean-out trade. So basically, it frees up more cash for Edelweiss to invest in their businesses, and the overhang is completely done on Nuvama. More on this in just a bit. JSW Steel, there are reports suggesting that the company wants to go beyond steel. It wants to look at aluminum. It wants to look at copper. So let's see how the market reads into this. And railway stocks, again, these are reports right now. We've seen the rally play out over the last couple of days, 2 days. Yesterday was very, very big for most stocks, barring the signaling companies. There's a report out in the Mint today saying that perhaps spending on railways is going to go up in a meaningful manner in the upcoming budget. So maybe causing a little bit of excitement and flutter on the stocks. But on the index, it's been consolidation, Nigel.
Well, that's right. And the feel-good factor is back on the street. And, the key data point that will tell you that is, though the Nifty is close to 6% away from those 52 big highs, but guess what? The broader markets, they're already there. Yesterday, the small cap index, in fact, they went ahead and made that fresh 52 week high. So Nifty a little bit away, mid cap index even closer to the 52 week high. And the small cap index, yesterday, it made a fresh 52 week high. So that's telling you the kind of mood on the street right now. It seems that the bulls, they feel they're back, and I wouldn't rule out, a good end to the year unless the Fed does something really drastic. But otherwise, I'm not ruling out a rather good close to this year. Moving to the options data, which will be very important given that today is Nifty weekly expiry, and so he's been telling us that last one was very, very volatile. So we'll keep an eye on that. A couple of strikes that were very, very active. 24,650 call, 30 lakh shares getting added there. On the downside, the 24,500 put as well did see a fair bit of addition. Well, you put in both those two premiums, you look at the recent highs and lows, and you're getting a broad range. On the downside, 24,450, 24,500. That's a crucial support zone that you're looking at. And on the upside, the 24,750, that's going to be the level that you'll want to cross, to feel good. So that's going to be a bit of a resistance zone on the upside. For the time being, the day's range, this should pretty much be it. If you get past the 24,750, you'll have a very, very good close to this weekly expiry. But the Nifty Bank, that as well is in a bit of a range. It's struggling to get past that 53,800 odd mark. So in the near term, it seems to be in a bit of a range. But stocks is what I'm looking at. And Trent, what a comeback that stock has made, right? It went down from around 8,300 all the way to around 6,200. And from there, it's moving quite well. So in yesterday's trading session, it closed above the 20 DMA, which is quite encouraging. And now it's very, very close to its 50 DMA. Good close is what we had on Trent. A couple of more data points with regard to Trent. Yesterday, if you look at it, well, there was a good amount of delivery-based buying as well. It was a little higher than the averages. And there's a short covering bounce that's playing out on Trent as well, because people were saying that maybe this one is in for a deeper correction. It surprised everyone. Open interest lower, stock ended higher in yesterday's trade. The other one I'm looking at is a cash market stock, which is Syrma. Well, yesterday we had a rather good close to the stock. It's still a distance away from the highs that we saw earlier in the year, but actually it's been pulling back quite well. It's now above the 20 as well as the 50 DMA, and a good amount of delivery-based buying on this one. So Trent is the one from the F&O basket, which is the Nifty stock as well, and Syrma is the other cash market stock. The street is sensing, I think, there's something got to give out here. So let's keep an eye on it.
That's an interesting one. Also, reports suggesting there's some sort of package maybe for even EMS players. Who knows? ERND and EMS. But let's quickly move on and get started with the equity call of the morning. And this one's coming in from Desh Peramuntilik of Jefferies. Now, he says that Asian equities are up 15% in 2024 so far, but some headwinds have emerged, such as Trump's tariff rhetoric and renewed dollar strength. He says despite these challenges, valuations are undemanding, and a stronger domestic growth push from China and India could see Asian equities faring well again in 2025. He adds that Japan remains attractive amidst accelerating TSE reforms, and Australia has also been holding up well. Desh adds their 2024 picks are up by an average of 21%.
Okay, well, interesting views coming in there. Let's get one more.